Good evening, everyone, and welcome to my Precious Metals Outlook. First video analysis for the month, for the year actually, 2016. Today is February 2nd, 4:13 p.m. Eastern Standard Time. So today we're going to be doing a two-part video. I'll try to knock them both out today. This analysis right here is going to be just technicals. The next analysis is going to be just fundamentals. We'll go over a couple of articles. And today we're going to do a couple of charts. We'll do the gold, silver, platinum, Dow, oil, British pound, and of course ratios, which I've hinted on my previous analysis that I'm looking at ratios to hopefully find a bottom on the precious metals market. I'll illustrate how in just a moment, right? So again, this is just technicals. I know it's a bit late. Before I begin, I wanted to wish everyone a happy new year and wish everyone lots of luck and lots of success here for this new year. And of course, hopefully we'll make a lot of good decisions. This market is a very volatile market, so we do need to be very careful, and we do need to have those safer assets that usually go up during times of political tensions, of wars, and so on and so forth, right? So I'm just going to do some different time frames for gold and silver, and then for the most part, everything else, I'll probably just do the longer term time frames. So let's get to work right away, right? For some reason, my chart's not going back before 1990. No big deal, because really I'm looking to highlight what happened when we started the bull market. So let's get to work here, right? So here we are, 2000, year 1999, 2000. We see a big spike after a big dip. We see the dot-com bubble, so people start gearing up for some disaster. It's a good thing they did, because the market ended up tanking back in 2008. So here we are. So back in 2000, we made an attempt to go over 300. Several attempts, finally successful in 2002. So for 2 years, we were trying to get above 300, and we finally did. Once we did go above that level, we created a high, came back down. This resistance now turned support, held very nicely, and we created a higher high. Same thing. Go over 327. Find another high, come back down, resistance now turn support. Now what we want to find in these levels here, we don't just want to find two candles and that's it, a breakout. They're usually stronger if we see a few candles. Okay, usually at most 7 candles, but you want to have 4, 5, 6 candles. Those are solid. Once you break that level, then it becomes a more legitimate level, especially if you have a few candles, right? So back in 2003, finally broke above this level of resistance and now turned support. And what happened? We never really tested the level here. We actually did test this level here, this high around 387. Come back down. Test this level here at 366, and the market keeps going higher. All right. What happens then? Now this becomes the key level, 426. Market goes slightly above, goes below, but again, finding some solid support here, and then it takes off again. Right. So now what we have is we have a market that's climbing. It continues to climb, and finally creates another high here back in 2007, 2008. Finds a high here. This level of resistance now turns support, holds us really nicely. Market continues to go higher, builds another high above 1030 right here. This is a really nice level of resistance, just like this one is, and just like these previous ones also, right? Then these levels start getting a little smaller because the market just is rallying way too fast. So again, a good level of resistance here. As you can see, market goes up, goes down, and then it takes off again. And we find these levels everywhere, right? And then finally we see a top, and the market starts to decline, right? So where's the level that we're looking to hold, right? If you're looking at this chart, which one is the level that you're looking to hold? Well, you're looking for this level to hold. This is a decent level, but this is really the strongest level I can find, right? Not a good level because there's only 2 candles here. Not a good level because there's only 2 candles here. So this level here is a really nice level, and this is a really nice level here between 975 all the way to 1035, right? What happens? The market comes back, finds support here at this level, zigzags a bit before going down lower. What happens? Same thing on the way down, right? You break this level of resistance, of support at 1077, and what happens? This level support now turn resistance, pushes the market down, right? So we've seen a low so far of 1044, I believe was the low, 1044, right? This high here was at 1032. Has gold found a bottom? I don't know, but I can tell you that this is a really phenomenal level to get in. And I'm hoping at this point that this wedge continues to bring us down so we can make some really nice purchases, some really big purchases here at around the 1020, 1030 area. Okay, I don't anticipate this market, and I've said this before, I don't anticipate the market to go below 965, 950, let's just say that. Right, so right now we have a really nice engulfing candle right here, really nice engulfing candle. Let's highlight this candle. So this is your engulfing candle right here. All right, that candle does suggest that we're gonna try to move higher. If I'm looking at the monthly chart, I'm probably looking to target this area here between 1075 all the way to the top of this trend line here. Okay, but we have to be careful because we have this trend line coming here from 2015, from January of 2015. This was 2015's high right here. So from the high of 2015, this is coming down, and as of right now, we might be looking to find some resistance there between 1130 to 1140. Okay. But again, as of now, this monthly chart has a really nice engulfing candle here, so higher prices are expected. All right, the weekly candle also looking very, very nice. Okay, but I am still looking to find some resistance between 1175 all the way to 1200. I'm still expecting the market to break above this trend line here, but who knows, it can continue to go back down from here. But I do expect another bounce here if it does come back down to 1030 or so. Okay, or maybe even lower, maybe 1020. So that's your weekly chart, and of course your daily chart, right? This is how the daily chart is looking. The technicals have been playing out really nice. Okay, really nice technicals. As you can see here, the market moved up. Now I made my last analysis, I think this was roughly back in December. This is the trade that I did back in December. Okay, as you can see here, the market came down here to 1070, went up really nicely, and then it came back down. When the market was here, that's when I put out a recommendation to buy at 1050 with a stop at 1037 roughly. As you can see right here, 1037 was my stop loss. Okay, so on this trade we're betting roughly $12-13 here. Okay, and so far on this trade has been working out phenomenal. We're up almost 70 bucks on this trade. Now mind you, I did take half the profits at roughly around 1075, 1080. I took a little bit of profits because again, it took a little bit long to go above this level 1080. So again, I didn't take that as good. So just in case, I took a little bit of the profits, but the market kept going up, continues to go up, comes back down, tests resistance, now turns support, and it continues to go higher. So on this trade, betting $10, $12, $13, we're up almost 75 bucks on this trade. Trade is doing phenomenal. Not only that, but also on the way up, I also found this trade here. And as you can see, this was resistance, now turns support, the market goes above that, and now I'm looking for a test of roughly this area. I make another buy recommendation here, and so far, how does this trade look? This trade looks phenomenal. So I added to that position, and right now we're trading in at 1028. Again, technically, I'm still looking for the market to continue to go a bit higher, maybe 1035 minimum, to test this trend line here. Okay, but again, we have some really nice bullish candles, so we're hoping that we're still going to have some more momentum to go higher. Right, let's go to silver. Here we are on silver. Same thing on silver. I made a recommendation here to buy at 1370, 1390. The market for silver, unfortunately, unlike gold, has not moved the way we'd like it to. We finally broke above this triangle. This is not a good signal. We had a really big triangle here, and the prices did not explode to the upside. Instead, they found resistance at this previous high, at the December high of last year, right? So right now we're finding we need to get above 1050, 1060 in order for us to test this trend line up here. As of now, the market is moving up, but is moving up very, very slowly. So unlike gold, where gold is moving up really nice and fast, silver is not really doing much. Okay. This was the silver trade right here, looking to get up over here, looking to get in at 1370, and so far, trade has been working out, but not as good as the gold trade, right? Okay, so this is let's look at the monthly. So for silver, again, these are the levels that we're looking at. This was the best level to get in here, in my opinion, $19. Again, this was a really solid level. As you can see, we broke through that level, go up, come back down, and then shoot back up. So this level right here, resistance not turn support, is a phenomenal level. You buy in this level, you're expecting the market to go much higher. It does not. The silver market is a lot more volatile than gold is in silver's defense. Now we're looking at this level here. This is also a phenomenal level of support, and but on the monthly chart, no big candle like we saw on the gold chart. So again, maybe a little bit more of a move to the upside. We'll see if silver can will create another low. Based on the ratios, I do expect another low. I don't know that it's going to be a new low. I don't know that it's going to go below 1355. I believe that the low is 1360. I don't know that it's going to go below that level, but I do know that this level is a solid level of support, and so is this one, roughly around 1080. At this point, we're getting close to this trend line here, and if we don't start making higher highs on silver, we might see another dip on the market, maybe down to $10, maybe to $12 to $10. But I will let the ratios dictate when the low is going to be. Okay, at these levels here, I'm buying all day long, daily. Okay. That's your monthly chart. Weekly chart here on silver. Again, very slow going on silver. The orders are in a profit. We have some profits, but we'll see if we can go up this high so we can get that 3 to 4 to 1 return rate. Like gold, we have a 7 to 1 return rate on gold, almost 7 to 1 so far on that one trade. So again, silver, not much going on in the silver market. We had a big move below this level here, $14, which in theory, you should have brought us to $12 to $11 from there, but it hasn't. So again, I am thinking that we're just seeing a lot of buyers taking advantage of these low prices, right? Let's go to the next chart. Let's go to platinum. Okay. Okay, so this is your platinum 4-hour. Actually, this is a small time frame. Let's go to the longer term time frames. Again, the chart's just not going back far enough. But again, we do have a really nice engulfing candle here. Back in the first month of December, actually on December of last year, we had a really nice engulfing candle. This is not an engulfing candle, but it is a piercing candle, which again, I would have liked it to be a little bit higher at 904 plus, because you want these piercing candles to go above at least half of the previous candle in order for them to be bullish. It's still a piercing candle because it's still a nice candle, but it's not a solid piercing candle. But platinum compared to gold is way oversold, so maybe platinum will start picking up from here. Who knows? Okay, that's your monthly. Let's look at the weekly now. On the weekly, because of this big candle that we saw here on the monthly, on the weekly, I like this area to buy, and I did buy, and this is how this trade went. Right, so we had almost got stopped out on the trade. I had a stop loss at 807. The market found a low at 809, and then it took off. I just took profits here not too long ago at 875. I took profits simply because, again, this is a solid level of resistance. Now, if we create another high, then I'll get back in. But as far as the long-term time frames, as far as the long-term positions, we'll stick to those long term. I really don't think platinum is going to go down too much further, maybe 750, maybe 775. But again, at 800, I bought some long term and some short term positions. The long term I'm in, I'm going to stay in, and the short terms I'm out. I already took profits, like I said, at 875. So again, we bet what are you betting? You bet $20, and you made on that one move, you made almost $50. So again, almost a 2 to 1 return, a little bit more than 2 to 1. So again, phenomenal trade. The long terms I'm in, I'll buy some more if we did a dip around, let's see if we see prices at 790, maybe 775 or 750. I will pick up some platinum. I will most likely pick up more platinum than I will gold if they both dip, simply because of the ratios, the platinum to gold ratios. Platinum is usually more expensive than gold, and right now it is $220, $30 less than gold. That's very unusual. And just on those ratios, kind of like silver, right now the ratios are 78. We'll go over the ratio charts anyway. But again, platinum looking really robust, but finding some resistance here at 880. And let's see if we're going to create another low, or if we're going to continue to break this long-term trend line here. Okay. Let's go to the next one. The next one is going to be the Dow Jones. Not much to say on the Dow Jones besides the fact that we finally broke this trend line. And now the dangerous part is that we've gone up. We've seen a nice bullish engulfing candle. And by the way, my previous analysis, I said to short this market roughly at around 17.8, 17.9. And if you did, you did very, very, very well. At this point, it just looks like we're trading in some giant box here. And we have to get out of this box here, okay? As you can see, we don't close below 16,132, and actually only two closes right here. But again, these are solid levels here of support, so I do expect a little bit of a push higher. I wouldn't bet on it, but I do expect a little bit of a push higher. Now, some analysts are saying to sell the dips, to sell any rallies on the Dow Jones. You know, I'd probably wait for this market to go back up a little bit higher. But again, the Dow Jones not looking too good. Finally broke below that trend line, this long-term trend line. Not only did we break below, but we're actually bouncing off this trend line. So this support now turn resistance is actually working out. So we'll see if this market has enough buyers down here to break above that trend line. And if we do, now we have to see if there's enough sellers on this area here to bring us back down. Once you create another low, once we go below 15,199, which is the low for which is the 2015 low, right? Once we fall below the 2015 low, trouble will be a brewing, because this market will most likely go down much further than that. I would think minimum, again, this is your level of resistance, now turn support. So I'm expecting a move down minimum to 14,000, this level here. Okay, at this level here, I would probably say between here and here, this is where you want to get in and hopefully take this higher. I wouldn't, because this is going to be a hard fall. And again, this is a broadening formation. I've talked about this formation. I am expecting prices to go back down to the $6,000 range. Okay, 6,000 point range for the Dow Jones. I know it sounds crazy, but again, these are technicals. Lows are getting lower and the highs are getting higher. This is a broadening formation, is a bearish formation, and I am expecting prices to come back down all the way back down to this area here. I would assume if the market breaks this level 1300 here, or maybe 12,500, at that point, in order to save the market from some more turmoil, maybe they'll announce quantitative easing, or maybe they'll just wait for the market to come back there so they can start printing the crap out of this thing. And at that point, gold is just going to take off. Is going to be insane. So very crazy and hectic stock market we have here in front of us. Let's look at oil. I like oil also. I actually got stopped out of my oil trade. I bought some oil and I had a stop loss at 28. We saw a low of 1274. I got stopped out, and now the market ended up moving up again. But let's look at the smaller time frames. Let's look at this daily chart, right? So again, market comes down. Again, I get stopped out at 28 even. The market goes down to 1264, and then you have some nice big moves. So this suggests some buyers in this level here. So I'm going to try it again. If the market comes back down and let's say 29, I'll pick up a little bit. But ultimately, I am expecting the oil markets. Everyone's talking about $20 price tags, $15 price tags. These are technicals. I don't really care about what people are saying. Technically and fundamentally, oil is just way too low. And once you have that supply and demand begin to hit, because a lot of producers are not producing, and you start having that lack of supply, prices are going to skyrocket. That's my opinion, right? The next chart we're going to look at is the British pound Aussie. Why am I looking at this chart? Really for one reason only. The reason why I'm looking at this chart is because, again, I want to showcase and highlight how these levels turn out when there's support, turn resistance. Support, turn resistance, goes up, comes down, support. Resistance turn support, market breaks out, comes back down. Actually, let's erase everything here. So here's the level here, right? Resistance, now turn support, holds up, resistance, oops, wrong area here. Resistance, now turn support, takes off, resistance, now turn support, and resistance, now turn support, right? This is the monthly chart. It doesn't look as nice as the weekly chart. This is the chart right here. This chart just looks phenomenal. And I took this trade here just like I did that Australian dollar trade. You know, these are kind of these kind of trades are you know, kind of like cup and handle formation charts, and they're just very solid. So what do you have? You have a level here of resistance, now turns support, goes up, comes back down, goes up, comes back down, and now this level becomes the buying level. I bought right here at the tip right here, okay, and it literally just picked up my order. All right, I'll show this one also. Here's the trade right before it happened, and this is what happens. So you touch my trend here at $2 even, or £2 even, and it continue, and it now is starting to go up. This also looks like a bullish flag, so I am expecting the Australian dollar to get very weak, to go very weak against the British pound. So we'll see how this plays out, but again, as of now, we have a really nice trend line that should hold us up and should help us with this trade here. We'll see what happens, right? But again, my point being that on this gold chart, you see how it goes up and now it's going down. You want to test these levels, and these levels are those are the best times to get in, especially on this gold chart here. Just like this, the resistance now turns support, you buy here, and the market goes up really nicely, right? And this is what we're seeing on the longer term time frame. So again, very slow, goes up, and now it's testing this level of support. Guys, there's an opportunity here, in my opinion, not to make 10% or 15% or 20%. Based on these technicals, I think there's an opportunity to double or even triple an account here, especially if you get in on silver. Silver, I do expect silver at $30 to $40 to $50. The ratios on silver are way oversold or overbought, and now I do expect the ratios to start going in the next direction, right? So where were we? So we went over gold, we went over the British pound. Now let's look at the ratios here. How am I doing on time? 22 minutes, not bad. So this is the gold and silver ratios here. And this is your monthly chart. Again, what do we see here? We see another broadening formation. These highs are getting higher and these lows are getting lower. As you can see, these have an opposite relationship to the prices of the to the precious metals prices. When we see a low here, we'll see a high on silver. When we see a high on the ratios, you'll see a low on silver, right? So right now, the previous low was right here. Okay, 84, and then we saw silver all the way down before it took off and hit 59. When we saw $49, I'm sorry, not 59, $49, the ratios were trading at 30. That's when we saw the low, and then the ratios took off to the upside. The silver took off to the downside. So here's what we have. We have a little bit of we have a bit of a triangle here, and the only thing I'm afraid of is that we're not going to test this level here, 86. And this is why I believe we're going to see another dip in the precious metals, simply because these ratios suggest that we're going to continue to go a bit higher. At 85, 86, that's when you want to buy the crap out of silver, when these ratios are at 85 or 86. And again, I'm hoping that we get there so we can have that opportunity to buy big and maximize our risk to reward, right? Who knows? We can find some resistance here and then turn around and come back from there. And at that point, you know what? We didn't get in as much as we'd like to, but we'll still ride the train if we see the train taking off. But again, you can have a situation like this where you go up, you come back down. What you're doing is you're ultimately looking to create another low, but you don't create another low. The market just turns around and it goes back up. So I'm hoping that this is not going to be the situation here, where we're not going to continue to go higher and the metals are just going to turn around and go up. Hopefully that won't be the case. But looking at the market and looking at the fundamentals, there's a really good chance that that might happen. Okay. And finally, let's look at the gold to Dow ratio. As you can see here, right? I'm expecting a big move to the downside. I did an analysis a while back, and this was it. This was back. This was 3 months ago, when the ratios were climbing, and basically I said that I didn't expect the ratios to go up much higher than 17. And so far, where are we? Let's load this up. So right now we did find some resistance at 17, and now it just looks like you don't want to own the Dow Jones, you want to own gold, because the gold to the Dow versus gold ratios, this trend line finally broke, and now we're looking to create lower lows, right? So again, I am not expecting the Dow Jones to rally more than gold. If you have, my opinion is sell your stocks, and that's UBS's opinion also. I'll go over that on my next video. But again, the Dow to gold ratios are not looking too good. That does bode well for gold, and that does not look good for the Dow Jones. So again, based on the analysis, again, I set to long gold and short the Dow. And so far, if you did what I told you, you're doing phenomenal. We did not go above 17, so that trade went phenomenal as well. So as you can see, the technicals have been playing up really nicely. You know, it's really right now just a matter of just taking it easy and allowing these technicals to play out, and not to go too crazy. This is a very hectic market. The Federal Reserve has no idea, so how in the world are you going to have an idea? So my suggestion is continue to pay attention to these ratios. But again, as of now, the market does seem poised to make a really nice move to the upside. I think it's going to happen sooner than later, but I do expect, based on the ratios, I do expect one more dip for the precious metals before we continue to go higher. Okay. Anyway, that's about it for today. I hope you enjoyed the video. I'm going to do the next video. It's just going to be fundamentals. That video is not going to be too long. We're just going to go over a few things. Okay. I hope everyone has a great rest of the week, and I'll talk to you next time. Thanks for joining me. Bye-bye.